Cell phones right now.
Charlie.
Good.
Charlie, you want to speak?
Hey guys.
Hey,
guys.
All right, it works. So, we're obviously here to talk about empty GOCs, Mount GOCs,
Empty guys. Empty guys.
empty GOCs. We only have 20 minutes, so I'm going to just try to go through this panel as fast as I can. I think what we were thinking is maybe we'd start with Andreas, and maybe you give us a little bit of history of GOCsings, and lead us right up to this point so we can pass it on to Ryan. Sound good?
Yeah, sure. So for those of you who are new to this, this was not the first GOCsing. By my count, this was the 6th GOCsing. And every single one of these GOCsings caused a significant drop in price, a significant drop in confidence, and revealed once again the gross incompetence of a single organization headed by someone who, with very little experience in security, and trying to implement a financial stock exchange in PHP caused untold damage to our industry. Keep in mind, this is the same person who also, as a visionary and an entrepreneur, bought an organization that was initially created for Magic the Gathering online exchange, and there's no mountain, right? There's no Mount GOCs. There's MT GOCs, and it stands for Magic the Gathering Online Exchange. That should have been the first hint. Took that organization and built a PHP backend that couldn't possibly scale. Nothing wrong with PHP. PHP is a great language for building web applications, not a great language for building stock exchanges. Certainly not if you want to build it as a monolithic application stack, which doesn't scale. We saw this happen several times. So GOCs was always running behind the curve. They were always trying to catch up with demand. We had serious latency problems. Back in April of 2013, we had one of the more serious GOCsings when the exchange collapsed under the ridiculous load of 7 trades a minute. Ooh. By the way, that was a time when some people went out and did a call to arms and created Buttercoin. I think what was interesting about that was that within 2 weeks of code hacking, I saw the first implementation on Buttercoin, ran it on my laptop, and got 100,000 trades a second out of it. 7 trades a minute on a monolithic PHP MySQL application that took the price from 266 down to 50 because the exchange collapsed and produced an hour of lag. Didn't halt trading. That would be the responsible thing to do, and one thing we do know about GOCs is they never did the responsible thing. And that was, I think by my count, that was the 2nd GOCsing. Then we saw the 3rd GOCsing shortly thereafter, which was blamed on denial of service. Later we found out that while GOCs was behind a CloudFront service protected against denial of service, their firewall was configured to allow direct access to the system's IP addresses. So you could just attack the server directly instead of going through CloudFront, which is really an amateurish mistake. If you're into security, you don't do that. I mean, that's so basic. So basic was way above the capabilities of this team. And so that was the 3rd GOCsing. Then we saw the 4th GOCsing with the withdrawal halt on US dollars. Then the 5th GOCsing with the withdrawal halt on the Bitcoin bug. Transaction malleability. There was a bug that only affected really GOCs because everybody else handled it relatively well. And where they didn't, they needed to make a few minor changes, but certainly didn't get robbed because of it. And then finally we came to the 6th and final GOCsing, which was when all of the money was gone. Now, I'm sure we're going to hear a lot of conspiracy theories and a lot of discussions about why and how and what. I think incompetence explains a lot. What became evident was that the cold storage wasn't cold. There's a famous IRC conversation where Carpello says, let me connect to the firewall and access the cold storage to transfer, and then he transferred the 424 transaction, which is pretty famous right now. If you can connect to a firewall to access the cold storage, it's not cold. So that wasn't cold storage. So really, GOCs is a story of a person who took on a challenge much too big, never asked for help, and always stayed one step behind the curve and just scrambling to catch up. And I think a lot of it's explained by sheer incompetence. The real question we should be asking is, why did we trust an exchange that took money off the blockchain, off the protections of key control by end users, and put them in custodial wallets that were centrally managed by one organization, essentially removing all of the security protections of Bitcoin and adding none of the security protections of a traditional banking system, and ending up somewhere in the middle as the worst of both worlds. That is the story of Gox. And that's a story that can give us some important lessons.
Excellent, thank you. Now, while Gox has filed for bankruptcy, most of what we know comes out of the crisis strategy draft. It was leaked by Ryan. Why don't you tell us about who your source is and where did you get it?
Yeah, sure. So it was given to me by, no, I'm just kidding. Satoshi. I wish that I could share Andreas' confidence that this is an isolated incident, but I actually think that this is also a systemic failure. How I came to get the document really started on last Sunday afternoon when I learned from a source that Second Market was going to be accelerating its announcement of a planned U.S. exchange. And I had known about this for a couple of weeks, but was obviously sitting on the information in confidence. And it happened right around the same time that Mt. Gox deleted its entire Twitter feed. So I immediately started reaching out to some of my connections within the industry to figure out whether these two events were related. And by virtue of that, actually had the document fall into my lap. Later learned that Second Market did absolutely everything professionally correct, which is very encouraging. But the document fell into my lap and I was able to quickly authenticate it. The person that sent it to me is an industry insider who I trust very much. And I was able to confirm with a source at the Bitcoin Foundation that the numbers were correct. I was able to confirm with a leading industry investor that the numbers were correct and that he was privy to the same details. I was able to confirm that the author of the PDF came from Mandala Consulting, which is a organization that does advisory work for Mt. Gox and whose executive in Tokyo is actually a high-profile member of the Tokyo Bitcoin community. To corroborate this with Charlie Shrem himself, who had a direct line of communication to Mark Karpeles, and in real time over IRC chat was confirming that this document was in fact authentic. So while Mark said that this was, quote, not Gox, he's full of shit because he paid the guys that wrote it. Afterwards, there was a lot of speculation that this leak had blown up deals. I'd also like to say that that's completely false. Mark claimed that they had investors with interest in bailing out Gox. If so, they were corrupt and criminal investors and were not based in the U.S. In fact, investors like Second Market were approached, in fact, but immediately handed over the information to the authorities as a regulated financial exchange, immediately halted trading of their employees, and went into lockdown mode in terms of compliance and doing everything by the book to not continue to defraud investors. And then finally, the joint statement, which came out shortly after I leaked the documents, was in fact already 80 to 90% complete by the time I made the leak. So this was already happening behind the scenes over the course of a 24-hour period leading up to the leak. What bothers me isn't that Gox is grossly negligent and incompetent and is the perpetrator of a massive fraud which is damaging to the industry. But it also has to do with the willful neglect of the Bitcoin Foundation and its leadership. The foundation knew that there were red flags since the US government seizures in mid-2013. They did nothing to promote consumer protections, transparency, or technical safeguards. CoinLab and Mt. Gox had a conflict of interest that stemmed back to early last year, and neither board member, Mark Karpeles, or Peter Vicens decided to step down. There's a troubling amount of overlap between Peter's company, CoinLab, and Bitcoin Foundation employees. And the organization had no safeguards in place to account for this type of egregious conflict of interest that existed for many, many months and may have contributed to the less informed and less connected investors in the industry keeping their money